Hello, my dear students. Welcome you all to the another lecture on CA Final Paper number 3, Advanced Auditing and Professional Ethics, RRB batch for May 22 and November 22 students. So, as you all know that up to the previous session, we have done sections up to 141, where we in the 139 we have already covered appointment, casual vacancy, and rotation of an auditor, and in the section number 140 we have covered resignation and removal, and section number 141 may we have already covered qualification, disqualifications, and eligibility. Right now we are left with a very small section, so let's wrap up this company audit as soon as possible. So section number 142, everyone. In the section number 142, we are going to talk about the remuneration of the auditors. Now see, when we talk about the remuneration of an auditor, you have to understand it very carefully that when we talk about the remuneration is always determined by the shareholders in the annual general meeting. But if you are a first auditor, of a which company, of a government company, then it will be determined by the C&AG. Subsequent audit of the government company, it will be determined by C&AG. First audit of the non-government company, as you all know, that will be appointed by the board of directors, therefore board of director, and generally in all other cases, members in the AGM will determine your remuneration. So who determines your remuneration? In most of the cases, members determine your remuneration in the AGM where you have been appointed, right? Next point. Sir, what does the remuneration include? Remuneration includes your audit fees, advisory fees, plus all those expenditures which are incidental in conducting an audit. What do you mean by that? Traveling expenditure or fooding, lodging, if you went outside for the inspection of any stock, or you went outside for a factory visit, whatever the fooding, lodging expenditures will be there, all that expenditure also will be given to you by whom? By the client. So it is also a part of your auditor's remuneration. Clear? Next point. Sir, in the remuneration section number 142, how the client is required to disclose the remuneration in his books of accounts or in his financial statement. So as per schedule number 3 of Companies Act 2013 under part B, as you know that schedule 3 is divided into two parts, part A, part B. Part A talks about the balance sheet, part B talks about the P&L statement. So as it is the expenditure of the client, the client in his schedule 3 part B, that is P&L statement, he has to show the remuneration as this. So he will put an heading as auditor's remuneration. As you all know that as per schedule 3, there are minimum 2 years information is required. So current year auditor as well, current year like auditor's remuneration as well as last year auditor's remuneration. Under the auditor's remuneration, you will find that there are two subheadings: how much remuneration he collected as an auditor and how much remuneration he has collected as an advisor. Remember one thing, advisory fees and the audit fees shall not be clubbed together. It will be clubbed together as a total money, but shall be shown separately under the subheadings: how much money he has received as an auditor and how much money he has received as an advisor. So in this, as an auditor, only his statutory fees will be counted, and as an advisee, if he has done any IT work, GST work, or any kind of ROC work related to his client, those kind of things are also going to be included as an auditor. So this what brings an end to our very small section called section number 142. Now came the most important section, that is called 143. In the 143, total up to 15 subsections are there. When we talk about the section number 143, subsection 1, that comes to duty to inquire. Then section 143, subsection 3, that is to duty to express an opinion on certain matters. So here one amendment has come. Here in this section, one amendment has come, and another amendment, the biggest amendment you already know, in the section number 143, that is CARO 2016 has been replaced by CARO 2020. So that I already told you, we are going to cover it in our auditors report chapter. And section number 143, subsection 12, duty to report the fraud. Here also the amendment has come, right? The amendment relating to penalty has come, and there are so many other residual provisions also in section number 143, like section number 143, subsection 5, subsection 6, and subsection 7, that is relating to the PSU audit, government audit, may test audit, supplementary audit, that will understand in the audit of PSUs may. And in 143 also we have subsection 9 and subsection 10, where the duty of the auditor is to follow the standards on auditing. Are you getting the point? Then we have subsection 4, where you have to give the duty to report the reasons in case of modified opinion. So like that, Small subsections are there, but in 143 major, these four sections are the sections which you have to concentrate upon. So let us understand and finish off the first section or first subsection of 143, that is called section 143 subsection 1, duty to inquire. Now, when we talk about section 143 subsection 1, duty to inquire, the first and the most important thing you all have to understand one thing is, these are the 6 matters on which duty to inquire is the obligation on an auditor. Means what? If any of these 6 situations comes in front of an auditor, then auditor has a duty to inquire this matter. Situation number 1, if the auditor sees that your client, if the auditor sees that client company has given any loans and advances. Remember, this point is not taken on loans and advances. It is not on your borrowings. It is on your advances. If your client company has given any loans and advances, has granted any loans and advances, the first duty to inquire on the auditor in this case is, he has to check whether the loans are properly secured or not, and the terms and conditions are regular or not. Should not be against the company. It should be detrimental to the, it should not be detrimental to the company. It should not be prejudicial to the company. It should be in the favor of the company. Say for example, company was having some idle funds. If they will deposit that funds in the bank as an FD, they could have earned 8%, but instead of that, they gave the loan to one of their directors, which earned only 4% for them. So there is exactly a 4% interest loss for the company. A company could have earned more, but they did not earn more. Why? Because the terms and conditions of that loan given to the director was prejudicial to the company. So remember one thing, whenever your client company gives any loans and advances or grants any loans and advances, the duty to inquire on the auditor is to check that whether it is properly secured or not, proper enough security has been given or not, and the terms and conditions of the loan must be on regular basis. These should not be against the interest of the company. Second duty to inquire under section 143 subsection 1 is, purchase and sales are not mere the book entries. You might be aware of the fact that when the year-end closing comes, the most of the companies are in the race of showing their best purchases and best sales. Means their figures should be more, so that they can impress the bankers and lenders to get the more and more investments and to get the more and more loans and advances. So in the race of that, sometimes during the year-end, they do the bogus sales and they do the bogus purchases. So when the auditor is doing the final audit, or when he is doing the statutory audit, this is a very common area where the most of the frauds may take place. So what is the duty on an auditor in this case is, he has to ensure that the sales and purchase which have taken place in the last few months of the year or throughout the year must not be mere book entries. These should not be only mere book entries. It should not be the bogus sales. It should be actual sales and actual purchases. Are you getting the point or not? Now, how I'll verify? I'll go to their inventory, I'll visit their godown, and in the godown, if the stock is getting less or day by day it is getting reduced, it means yes, they are making the proper sales. And if the stock is increasing day by day, yes, they are making the proper purchases. So there are so many methods: inspection, observation, various RAP procedures, risk assessment procedures you have, by which you can understand कि yes, the sales and purchase are actual or sales and purchase are bogus. So make sure that whenever you are checking the sales and purchase of your client, ensure that they are not bogus in nature. Next point, personal expenditure. The third duty to inquire is, personal expenditure shall not be allowed to be debited to P&L account. That we already know, personal expenditures are your personal, they are not the business expenditure. If you come across any kind of personal expenditure which the client is debiting to P&L account, make sure that you should not allow it. The fourth duty to inquire is, if your client is a non-investment company, if your client, again I'm saying, it is a non-investment company, they should not have sold their investments below its cost. If they have shown their investment, if they have sold their investment below their cost, that should not be treated as an ordinary loss. That should be treated as an exceptional loss. Because being a non-investment company, your major line of activity is not buying and selling the securities. Being a non-investment company, you are into a particular business and you are not allowed to waste the shareholders' funds. So you are not allowed to sell your investments below its cost. So let's say, for example, suppose you are an auditor of Motilal Oswal company and you are also an auditor of Reliance Industries Limited. both the companies made the 100 crores of investment in Tata Estates. Are you getting the point? But in 2021, say for example, due to recession, they sold their investment at 60 crores and 60 crores. So what is the ultimate loss for both the companies? 40 crores for Motilal Oswal and 40 crores for the Reliance Industries Limited. But for the Motilal Oswal, being an investment company, for the Motilal Oswal, it is an ordinary loss. But for the Reliance, it is not an ordinary loss. It is an exceptional loss. As an auditor, I will not have that much of point of worry, that much of duty to inquire when I'm doing the audit of Motilal Oswal. But definitely, my eyes will be on my client Reliance, because for them, this 40 crores of loss is not an ordinary loss. It is an exceptional loss for them. So are you understanding the point? So in this duty to inquire, your fourth duty to inquire is, being a non-investment company, your client should not sell its investment below its cost. Now, what is the fifth duty to inquire? The fifth duty to inquire is to make sure that whatever the paid up share capital your client is showing, they should have received the consideration for the total paid up share capital, either in the form of cash or in the form of bank. So reconcile the total paid up share capital with the bank statement and the cash vouchers. If you think that, let's say for example, there are 200 crores of paid up share capital is there, it means obviously 200 crores of money they must have received. If they have issued 200 crores of capital, if they are claiming that there's a 200 crores of paid up share capital, it means they might have issued 200 crores of, paid up share capital means they might have received it in the form of bank or in the form of cash. So check out their bank and cash registers. Let's say for example, you got only 180 crores reconciliation. So what is the difference? 20 crores of difference is coming. Ask them, inquire from them where these 20 crores have gone. I'm not saying that your client is wrong in that, but you have a duty to inquire where that 20 crores have gone. There might be a case that out of 20 crores, 5 crores they might have paid as an underwriting commission in the form of shares, free of cost. Sometimes we issue it to the underwriting commission. Sometimes we pay the promoters remuneration in the form of shares, that is also free of cost. So 5 plus 10, say for example, 5 plus 10 comes to 15. So 195 crores matched. Or sometimes the company may issue the fully paid bonus shares, and you all know that in the fully paid bonus shares, we only capitalize the CRR. There's no inflow to the company. So it can be any reason why there's a difference coming. So your duty to inquire is to find out the reason why their paid up share capital and the receipt of the paid up share capital amount is getting differentiated. Is it clear, everyone? Yes. Next point, what is your duty to inquire? Number 6. You should be very careful in this area. You should not allow your client to show their loans and advances to be categorized in the form of deposits. Loans and advances shall not be categorized as deposit. So if your client is showing some of its loans and advances which it has given in the form of deposits, make sure that you are telling your client not to show it, not to make it, or not to show it like that. Reason being very simple. Deposits are non-income generating assets. Say for example, lease deposit, rent deposit, or any kind of deposit. But loans and advances are income generating assets. So if they will categorize the loans and advances as deposits, it means your client is indirectly going to hide an income. Let's say for example, there is one company which has given loan to the XYZ Limited at the rate of 20 crore rupees and deposits are 1 crore rupees. If they will make this balance sheet as this balance sheet, means what? They converted their deposits into what? Loans, and loans into what? Deposits. Now see, they have done the vice versa of these two things here. But what is the impact on the financial statement? Direct impact. It means they have hidden 19 crores of loans in the form of a deposit, and say for example, interest at the rate of 10% comes. So it means that they are almost able to hide 1.9 crores of interest income. Are you getting the point or not? So make sure that it is a very common practice which generally the company does to hide their loans and advances in the shedding of what? In the shed of deposits. So you should not allow the loans and advances to be categorized in the form of deposit. So that brings an end to our very important section called section number 143, subsection 1, duty to inquire. So there was no amendment in that. That's why we will move to the next section. Now in this section 143 subsection 3, duty to report on certain matters, there are so many amendments. So many amendments means in the clause number J, there are total 10 clauses in 143 subsection 3 which the auditor has to report. In the clause number J, there are some almost 3 extra points have been added, and one I clause also have been added. So 2 clauses have been altered. I clause, J, E, F, G, H, I, J, K. K clause has been added, and J clause में some 2-3 amendments have come. So overall 143 subsection 3 clause, which is also known as OLRR paragraph in our SS 700 audit report. You know that as per SS 700, we have to learn the basic elements of an audit report. So there is one OLRR para in our audit report, that is called other legal and regulatory requirements para. There the change has come. Now I'll tell you what is the change. First, let us understand what are the other clauses. Now, under section 143 subsection 3, that is duty to report on certain matters, there are things which the auditor has to report. What is the first thing auditor has to report? Whether the proper information and explanation from the client has been received or not. Okay, whatever the information and explanation you ask from the client, whether that information and explanation the client has provided to you or not. For you, is it a proper information and explanation received or not? If not, what is its impact on financial statement? You have to report on clause number A. In the clause number B, you are reporting that whether the client's books of accounts are prepared as per section number 128 or not. You all know that in the maintenance of books of accounts, we have one section called 128, according to which the books of accounts shall be maintained by the company. So you are nothing but commenting, and you are putting the remarks on whether the books of accounts of the client are as per section number 128 or not. In the clause number C, what we are reporting, whether branch audit reports from the branch auditors have been received and sent to you properly or not. Are you satisfied with the branch audit reports or branch audit findings which are sent to you by the branch auditors, and is it being properly sent to you or not? So clause number A mein we are reporting upon information and explanation. Clause number B mein we are reporting upon books of accounts, section number 128, and clause number C mein we are reporting upon branch audit reports. And in the clause number D, we are reporting that whether the financial statements have been in agreement with the books of accounts or not. You all know that section number 129 talks about what? Financial statements. But we all know that financial statements are prepared from what? Books of accounts. So financial statement must agree with what? Books of accounts. So what we are trying to tell you here is whether your financial statements are in agreement with books of accounts or not. In the clause number E, what the auditor is reporting about, financial statement must have been prepared in compliance with the accounting standards. As you all know that from 2015 onwards, some companies have started following INDAs, and some companies are still following the accounting standards. So whether they are following INDAs or whether they are following accounting standard, we have to check that their financial statements are prepared in compliance with the accounting standards or not. Then in the clause number F, you remember these clauses, you have to remember in a very sequential manner. The clause number A is on information and explanation. Clause number 2 is on books of accounts as per 128. Clause number 3 is on branch audit reports have been received properly or not, or sent to you properly or not. Clause number 4, that financial statement must be in agreement with the books of accounts. Clause number 5, you are reporting upon financial statement must have been prepared as per the compliance of accounting standards or INDAs. In the clause number F, that is 6, you are reporting if you have given any adverse remarks. If you have given any adverse remarks on the entity or not, and if your adverse remarks have given any impact on the functioning of the company or not. So whether any negative, adverse means negative remarks, whether any negative or adverse remarks by an auditor has been given on the financial statement, and whether such adverse remarks have left any impact on the financial statements of the company or not. Next, in the clause number G, you are reporting that whether any director is disqualified under section 164 subsection 2 or not. If I'm not wrong, this you have done in the corporate and allied laws, where you have understood that section number 164 is talking about the disqualifications of an auditor. In that, there are some special disqualifications given under section number subsection 2, 164 subsection 2. If any of the director was a director when the company has failed to file the financial statements or annual returns with the ROC for continuously 3 years, or the company has failed to pay the interest on debentures or repay the debentures or interest on deposits, or any preference dividend was pending continuously for 1 year and company failed to pay, if you are a director at that point of time, then also you are disqualified. So as you all might be aware that in the law, company law, you have section number 164 which talks about the disqualification, but here we are not talking about the total disqualifications of the director. We are specifically talking about the special 2 disqualifications, where the continuous 3 years disqualification and continuous 1 year wala. Annual returns and financial statements were not filed continuously for 3 years, and company failed to repay its debts or outstanding borrowings on continuously for 1 year. If you were a director at that point of time when the default was taking place, you are disqualified to be an auditor or to be a director in any company for the next 5 years. That is what section number 164 subsection 2. So in this point, the auditor is disclosing, is reporting whether any of the director is disqualified under section 164 subsection 2 or not. So let's understand clause number A to F again. Clause number 1 was on A, was on information and explanation received is correct or not, and what is its impact on financial statement. Next point, books of accounts must be prepared as per section number 128. Point number 3, branch audit reports. Point number 4 was relating to financial statements in agreement with books of accounts. Point number 5, that is clause E, relating to financial statements must be prepared as per the accounting standards and IND-AS. And clause number H, E, F, G. Yeah, clause number F was talking about if the auditor has left any negative or adverse remark on financial statement, what is the impact of that on the functioning of the company. And clause number G में auditor is also reporting that whether any of the director is disqualified under section 164 subsection 2. And in the clause number H, the auditor is also reporting whether any qualified or qualification or any reservation or adverse remarks have been given in the on the books of accounts of the client or not. So these were the very common clauses in 143 subsection 3. So far amendment has not come. Up to I clauses there is no amendment. But I clause is very important. 143 subsection 3 clause I, because it is reported in your audit of automated environment also. At the same point of time, it is reported under internal risk assessment and internal control chapter also. So what is 143 subsection 3 clause I? Here the statutory auditor of the company is reporting whether the company has adequate internal financial control system installed in the company or not. Do they have the good operational and effective internal financial control system in their organization or not? But this clause is not required to be reported. Which clause? I clause. That means the 9th clause is not required to be reported if you are issuing the statutory audit report of 1-person company, small company, or the company whose turnover is less than 50 crores and borrowings, outstanding borrowings are less than 25 crores. तो अगर आप OPC के ऑडिटर हो, अगर आप स्मॉल कंपनी के ऑडिटर हो, or if you are an auditor of a company whose turnover is less than 50 crores and the net worth, outstanding borrowings is less than what? 25 crores, you need not report on this clause, that is 143 subsection 3 clause I in their auditor's report. Other than this, in every company you have to report that whether the company has an adequate internal financial control system or not. Now the amendment has come in the J clause. Where the amendment has come? In the J clause. J clause is known as other matters. In the J clause actually, there were 3 subclauses, A, B and C. So amendment is not on these 3. Amendment starts from the D. Clause D has been added in the clause D, in the subclause D, in the J clause. See, 143 subsection 3 J clause. In the J clause, one new point has been added, that is called D point. In the D, 3 more points are there, A, B and C. Now listen to this clause very, very carefully. Other matter clause में auditors is reporting. Now what does the auditor reports on the subclause A? He reports that whether the company has shown the impact of its pending litigations on its financial statements or not. You all know that so many companies have so many contingent liabilities. So when the company has the contingent liabilities, it is necessary for them to show the impact of those pending litigations against the company on its financial statement. So we are reporting here whether the company has shown the impact of pending litigations on its financial statements or not. Next point, sometimes some of the client companies will enter into a derivative contracts, that is called forward contracts or future contracts. If your client has entered into any derivative contracts or commodity contracts or forward contracts or future contracts, you are expecting from your client that they should have made an adequate provision for the same. You all know that derivatives are future contracts, and in the future the prices may go up or the prices may go down. So you expect your client whether he has made adequate provision or not. So this point is showing the impact of pending litigation on financial statement, and this point is whether adequate provision has been made if your client has entered into a derivative contract. So next point, you all know that under section number 123, if the dividend is not paid within 30 days from its declaration in the AGM, we transfer that dividend to unpaid dividend account, unpaid and unclaimed dividend account. In the unpaid and unclaimed dividend account, this will be kept for 7 years from the date of declaration, for the next 7 years. Once the 7 years are over, after that, the unpaid dividend account or unclaimed dividend amount is required to be transferred to IEPF, Investors Education and Protection Fund, or IEAF, Investors Education and Awareness Fund. So here we are reporting whether any delay by the company has been done to transfer the funds from unpaid dividend account to IEPF or not. If the company has done the delay, you all know that as per section number 125, you are only being provided 30 days from the closure of the unpaid account, from the closure of the unpaid dividend account. Within 30 days, you have to transfer this to the IEPF fund, Investors Education and Protection Fund. But if you do not transfer it, then in that case, there's a problem. So if the company has done any such kind of delay, that we are going to report in clause number C. Now, up to this, there was no amendment in this section 143 subsection 3. So 143 subsection 3 ka clause number J has been amended. Now, let's understand, sir, what is the amendment? I will tell you in a very smooth manner. When you read it from the ISA material and when you will read it from the RTP, so many students complain me, sir, this is going bouncer to us. I don't know what kind of amendment has been done. Now, I'll tell you in a very smooth manner. Now, try to understand. In the clause J, there is A, B, C point was already there. D point, this D point is an amendment. In the D point, there are 3 points. Now listen to this. If your client company has given any, now it has to be understood in this way. Try to understand, whenever the client company gives any loan to another company or does any investment to another company or person or does any advance to any company. So whenever your client does any loan, gives any investment or gives any loan, does any investment or gives any advance to any person or the entity or foreign entity from its borrowed funds or from its securities premium account or from the other sources, whatever the sources may be, whenever your client does give any kind of loan, does any kind of investment, does any kind of advance, it has to mention that in the notes to accounts. You all know that as per section number 129, notes to accounts is one of the financial statement. So if your client company, if you are a statutory auditor of a company and your client company has already given any loan or done any investment, means outflow, or given any advance to any person, any entity or any foreign entity from its borrowed funds or from its securities premium account, from its other sources, it has to mention that in notes to accounts. That is required, that is mandatory. But here what the auditor is asking the client, he is asking the client company, did you give any loan, did you make any investment, or did you give any kind of advance to any person, any entity or any foreign entity other than what you have already disclosed in notes to accounts? If you have done that, give me the MRL on that. And if you have not done that, give me the MRL on that. You know the MRL when I'm talking about? MRL stands for Management Representation Letter, or as per SF 580, it is known as Written Representation Letter. When we needed a corroborative evidence, when we needed a supportive evidence on something, which is purely the responsibility of the management, we always ask the management an MRL or the WRL, or it is also known as management certificate. So if you have already disclosed any loans, any investments, or any advances given by the company in the notes to accounts, that is fine. I'm not talking about those loans, investments, and advances which are already disclosed in the notes to accounts. I'm not talking about that. If you have given other than that which is already disclosed in the notes to accounts, if you have given any loan, or if you have done any investment, or if you have done any advance from your borrowed funds, from your other sources, from your securities premium account to any person, to any entity, or to any foreign entity, then other than that which is already mentioned in the notes to accounts, please give me that WRN on that. Or if you have not done that, then also give me the WRN on that. Are you getting the point? So read the point, that auditor has received a representation that management has not loaned, not invested, not advanced any funds, means outflow, to any person, to any entity, to any foreign entity from its borrowed funds, securities premium account, and other sources, which loans, advances, and investments other than those parties which are already specified in notes to accounts. Which are already specified in notes to accounts, I'm not bothered about that. This point is, please tell me if you have given or not. If the management is saying, no, we have not given any loan, we have not made any investment, we have not given any advance to any person, any entity, any foreign entity from our borrowings, from our securities premium account, from our other sources to any other person other than those which is disclosed in the notes to accounts, then management has to provide you the WRL or MRL, management representation letter, or written representation letter you have to receive from the management, because you have to collect an evidence that management is denying that they have not given any loan, advance, or investment to the parties other than which are already disclosed in the notes to accounts. So if the management is saying that no, we have not given, take WRL and take MRL on that, right or not? So this is on giving the money. This amendment is on giving the money. So let's understand it again. Auditor must receive a written representation from the management, where the management is declaring that we have not given any loan, we have not made any investment, we have not given any advance to the parties other than which are already disclosed in notes to accounts from our borrowings, from our securities premium account, and from our other sources. On that, we are taking WRL as per SA number 580 from the management on that. Crystal clear? Now, A point ka, if I have to ask you what is vice versa, that is B point. In the B point, auditor is taking what? Auditor is again asking the MRL from the management. Auditor is again asking the WRL from the management. Hey management, did you take any loan? See, in the point number A, it was giving the loan. But in the point number B, did you take any loan? Did you take any loan from the persons? Did you take any funds from the persons other than those mentioned in the notes to accounts? Are you understanding the point? In the point number A, it was outflow. In the point number B, it is inflow. The auditor has received a representation that management has not received any funds from any other person, entity, or foreign entity other than those parties which are already specified in notes to accounts. So in the point number A, if the client company has given any, or in the point number B, if the client company has taken any. If the client is saying, no, I have not given to anyone, and no, I have not taken the money from anyone, take the WRL on the same. Then sir, what is the point number C? Point number C may auditor is declaring that I already got the WRL on both the points, so therefore I have no reason to doubt on A and B above. देखो, I needed an evidence, they gave me the evidence. Therefore, right now I don't have a doubt whether they have received any money or not, or they have given any money or not. So clause number A was talking about giving any loans, investments, and advances, and clause number B, getting any loans, advances, and getting any loans and advances. So if the management is declaring that neither we have given nor we have taken from any person other than which are already mentioned in notes to account, auditor should take the MRL and the chapter is closed. This is the amendment which was brought in the clause number J under the subclause number D. Under the subclause number D, there are 3 points. Point A is on outflow, funding somebody, or point number B was on getting funded. So if the management is saying that we have not funded anybody or we have not received any funds from anybody other than those mentioned in the notes to account, take the WRL, written representation letter on that. And once you have received it, auditor must declare that if he is satisfied, he will declare that he has no reason to doubt on A and B. And this clause also added. What is this clause? Very simple clause. 123 section in the dividend topic we know now. Within 30 days of declaring the dividend in the AGM, within 30 days of declaration, the dividend must be paid. So here we are declaring that company declared and paid the dividend in compliance of section number 123 of Companies Act 2013. And what is compliance of section number 123? Within 30 days from the declaration of AGM, please pay the dividend to all the members. And please send the share warrant to all the members. If the company fails to do that within 30 days and it is the company's fault, then in that case, section number 127 will be applicable. That is a penalty on the company. Company ka kitna penalty hai? 18% rate of interest they have to pay. And the officers in default ka penalty hai 1,000 rupees per day and imprisonment up to 2 years. Did you get the point? So we have just simply added one point whether the company has declared and paid the dividend on time as per the compliance of section number 123 or not. So this is the amendment part which has been recently added by the ICA in your section number 143, subsection 3, clause J. Under the clause J, already A, B and C point was there. D clause has been added and E clause has been added. In the D clause, 3 points have been added. A point in the clause, subclause D, it is saying that the auditor must receive a representation that the management has not funded or not loaned, not invested, not advanced from its sources to any person, any entity or foreign entity other than those parties which are already mentioned in notes to accounts. And clause number B may they have not received any funds from the parties other than which are mentioned in notes to accounts. And C point may he is declaring that he has no reason to believe or no reason to get doubt on A and B. And in the E point, whether the company has declared and paid the dividend in compliance with section number 123 of the Companies Act or not. So this was a small amendment came in section number 143 subsection 3. So 143 subsection 1 we are done with. 143 subsection 2 also we are done with. 142 also we are done with. 143 subsection 12 now we are going to do, and 143 subsection 11, that is Caro, we are going to do it in the audit report chapter. Now here also in this point 143 subsection 12, duty to report a fraud, one small amendment has come. What is amendment? Amendment came in its penalty. Earlier the penalty was it was a minimum fine of 1 lakh or maximum fine of 25 lakhs if the auditor fails to report the fraud to the central government within 30 days. Now the penalty has been changed. Now what has been changed? For that we have to learn the section first. Now what is 143 subsection 12 everyone? It is a duty to report a fraud. What is the section? Duty to report a fraud. You know that if you are a statutory auditor of the company, if you are a secretarial auditor of the company, or if you are a cost auditor of the company, so it means 143 subsection 12, subsection 13, subsection 14, subsection 15. Actually there are total 4 subsections in this 143: 12, 13, 14, 15. But generally we talk about 12 only mostly because 15 talks about the penalty and 13 and 14 talks about the procedure. Are you getting the point? So I'm going to treat it as 143 subsection 12 only. That will more than enough if you will quote this section. So as a statutory auditor, secretarial auditor or cost auditor, so this section covers all the 3 professionals practicing CA, CS and CM. Practicing one. So if you are a statutory auditor, secretarial auditor, cost auditor of the company, while doing an audit, when you were doing an audit, you come across, you are not digging out, you come across any kind of fraud, omission or material misstatement due to fraud or error, your duty is to report it to central government within how many days? Within 60 days. Now the question is, sir, who is the central government? We are going to report it to the Secretary of Ministry of Corporate Affairs. Right? But the biggest problem was, sir, how much amount of fraud we have to report? Then the solution to this question was given by rule number 13. So what is the rule number 13 says that? Rule number 13 says a very simple thing. Rule number 13 says that rule number 13 of CAR 2014. Sir, what is rule number 13 of CAR 2014? Rule number 13 of CAR 2014 is nothing but called Company Audit and Auditors Rules 2014. Company Audit and Auditors Rules 2014. Under that, rule number 13 came. Now what the rule number 13 is saying? Rule number 13 is saying a very simple thing. What does it say? It is saying that let the auditor first quantify the fraud. Let him do the quantification of the fraud. Let him see that how much fraud amount is involved in that. Once the auditor will quantify the fraud, if the fraud is less than 1 crore, if the fraud is less than 1 crore, if the fraud is less than 1 crore, not equals to less than 1 crore. This is the biggest area where the students may make the mistake. If the fraud amount involved, means fraud which he came across, is involving an amount less than 1 crore, then your duty is only to report it to audit committee. If there is no audit committee, report it to board of directors within how many days? Within 2 days, and your work is done. If you report it to audit committee, or if the audit committee is not there, to the board of directors within 2 days, your fraud amount is less than 1 crore, then your duty is over. You need not do any further reporting to central government and such like that. But if the fraud amount is greater than equals to what? 1 crore. If the fraud amount is greater than equals to 1 crore, then you have to follow the same process. Report it to audit committee. If no audit committee, to the board of directors within what? 2 days. But you have to give them 45 days. You have to wait for 45 days to allow them to justify and explain why this fraud has taken place in their company. Let them explain. Let them justify why this fraud has taken place in their company. Did you get the point? So you will wait for 45 days. So here the journey of 60 days starts. So 45 days of wait is over. After the 45 days of wait, there will be two things. Either their reply will come or their reply will not come. If their reply will come, if the board of directors or audit committee will give you the explanation or justification, then attach their comments with your report on fraud. And if they do not reply, then you have to prepare the report on fraud. In both the cases, you are preparing the report on fraud. But if they reply, attach that reply also with the report. Otherwise, you prepare the report when in the next 15 days. So after 45 days, you don't have to wait for 46th day also. Within the next 15 days, your report should be ready. If their comment has come, attach those comments. If their comments have not come, then do not attach any reply. But in the next 15 days, the reports must be prepared by you. And it should be sent to the Secretary MCA. Sir, on whose letterhead? On auditor's letterhead. Sir, what the auditor's letterhead should contain? It should contain the name of the auditor, address of the auditor, contact number of the auditor, email of the auditor, membership number of the auditor, COP details of the auditor. On your letterhead, these 6 things are must. And we are sending it to whom? Secretary MCA. Sir, in which format we are reporting? The report on fraud which you are preparing must be reported as per the AUDIT-3 format. And when you are sending it to the Secretary MCA, make sure that you are sending it via a registered post with acknowledgement due. You are sending it via RPAD, a registered post with acknowledgement due. But if the registered post with acknowledgement due is not possible for you, then in that case, at least send a speed post. At least send a what? Speed post. But when you are making an option of sending it via speed post, remember one thing, we are not sending it via email. We are sending it via post. But when you are sending the speed post, at least send them one email confirmation to the Secretary MCA office as and when you receive this parcel, please reply back whether you receive the parcel or not. So either you do registered post with acknowledgement due, or you send a speed post with an email confirmation. And you all know that it has to be prepared on the whose letterhead? Auditor's letterhead. It should be prepared. And it should include these 6 information. And it is to be reported as per the format of what? ADT-4. Now this is what section 143 subsection 13 and 14 talks about. Now section number 143 subsection 15 talks about what? In case the auditor fails to report or fails to oblige his duty under section 143 subsection 12, then this is the amendment area. Now what is the amendment? You can see that very simple amendment. Earlier the fraud ka jo, the duty to report the fraud ka, if you do the violation, then it was minimum 1 lakh, maximum 25 lakhs was the penalty. But now that penalty has been replaced by, in case this fraud was related to listed company which you failed to report, then in that case you will be liable to a penalty of directly of rupees 5 lakh. So auditor will be liable to a penalty of rupees 5 lakh. And in the any other cases, the penalty will be 1 lakh. It means in case of unlisted company, public company, unlisted private company, unlisted public company, in such kind of companies, if you detect a fraud and you fail to report, your liability is rupees 1 lakh. It means you are liable to fine of rupees 1 lakh. But if it was a listed company, then your penalty is going to be 50,000. So that brings an end to our another section 143 subsection 12, duty to report a fraud. So what is amendment? Guys, amendment came only in the penalty. No amendment otherwise. In case of listed company, the penalty is going to be 5 lakhs. And in case of other cases may you fail to report, the penalty is going to be 1 lakh on the auditor. So that brings an end to your section number 143 subsection 12. Now CARO 2020, as I already told you, section number 143 subsection 11, we are going to cover it under audit reporting chapter. Clear enough? So our 143 section is also over. 139, 140, 41, 42, 43. Now 144 is also already over. Do you remember yesterday in the previous session we have done section number 143, 141 subsection 3, disqualification. Disqualification mein, do you remember the last disqualification? What was the last disqualification? Auditor is not allowed to provide the services which are prohibited services under section 144. So these are the list of those prohibited services which you have to remember. So with that, our section number 144 is also over. So 139 is over, 140 is over, 141 is over, 142 is over, 143 is over except CARO 2020, and 144 is over. Now let us understand what is section number 145. What is section number 145? This is huge topic of CARO. You can see that all the 21 clauses are there that will understand exhaustively, right? Now there are some residual things, rights and duties of an auditor. You know that what are the rights of an auditor? Right to remuneration, right to have information and explanation from everyone, right to have an access over the books of accounts, whatever it is, a voucher, document, a report or any kind of records. Then right to visit the branches. Remember, you can only visit the Indian located and domestically located branches. Foreign branches are outside your scope, so you don't have the right to visit the foreign branches. Right to sign an audit report, that I already told you, and it is itself is a section number 145. The auditor has a right to sign the audit report, but in case you are not available, can your practicing partner sign? Yes. Other than you, who can only sign the audit report? Your practicing partner can sign, not your partner, because non-practicing CA can also be your partner. But who is only allowed to sign it if you are not there? Your practicing partner can only sign. That is what itself section number 145, right to sign an audit report. Then section number 146 is what? Section number 146 is duty to receive, attend and participate in the meeting. Remember one thing, whenever the shareholders meeting will be conducted, that is AGM and EGM, every company is under an obligation to send auditor a notice of that meeting. It means it is a right of an auditor to receive the notice of every shareholders meeting. Remember, again I'm saying every shareholders meeting, not board meeting. Board meeting ka notice will not be sent to the auditor. Only the shareholders notice, shareholders meeting ka notice will be sent to the auditor. After receiving the notice, attending the meeting is your duty. Right is only to receive the notice. Once you have received the notice, attending the AGM and EGM is your duty. That is what section number 146 is saying. So what is section number 146 is saying? कि attending the meeting for which you have received a notice is your duty. Sir, why it is duty? It is my wish whether I want to go or I don't want to go. No one can force me. No, you can't say like that. Law says that. Tell me one thing. AGM में one of the ordinary business is what? Adoption and approval of financial statement. Reason number one. Reason number two, appointment and reappointment and removal of an auditor. So when you yourself will not be present in the AGM, who will clarify the doubts of the shareholders if they will get any on the audit work? Are you understanding my point? If the shareholders will get any kind of doubt on the audit related work, board of directors will not be able to clarify the doubts. Therefore, it is your duty that you have to attend the meeting if you have received the notice of the AGM or EGM. So make sure that you are attending. That is what section number 146. The duty to attend the meeting is your 146 section, and right to sign the audit report is your section number 145. So we are done with 139, 130, 140, 141, 142, 143, 144, 145, 146. So what is 146? Duty to attend the meeting. What is 145? Right to sign the audit report. Now, after attending the meeting, sir, can you participate in the meeting? You can only and only participate, sir, if your audit related work is being discussed in the meeting. If your audit related work is being discussed in the meeting, you are allowed to participate. Otherwise, keep your mouth shut. You are not allowed to participate in the meeting till the time it is not recorded. But if the audit related work is being discussed, you are allowed to participate. Clear, everyone? Yes or no? So receiving the notice is your right. Attending the meeting is your duty. And participating only when if the audit work is discussed. Next, what is the next right you have? Right of lien over the client's books of account. Actually, ICA does not support this right. This right we have borrowed it from ICAEW, Institute of Chartered Accountants of England and Wales. But if you want to have a right of lien over the books of account, India mein allowed nahi hai. But I will tell you what are the 4 conditions to be satisfied as per ICAEW if you want to exercise this right over the books of account. Say for example, you have done the audit, and when you have done the audit but your client is not ready to pay you the audit fees. So in that case, you can have a lien over the books of accounts of your client, but those books of accounts on which you are having a lien must be belonging to the which year? It must be belonging to the current year books of accounts. It should be belonging to the current year. And you must have used those books of accounts for some audit purpose. You must have used those books of accounts for some audit work. You must have used them. Next point. It must be in your possession in a lawful manner. It must be a lawful possession. You are not allowed to use any unlawful means to get the possession of those books. They must have come to your custody in a lawful manner. That means with the prior permission of the client. And the most important, only if your audit fees is pending, not advisory fees. If your audit fees is pending, then only you can have the lien over the books of accounts. If your advisory fees is pending, you are not allowed to have the lien over the books of accounts. Is it crystal clear? Yes or no? Then what are the duties you have? You already know these duties. Duty is to express an opinion on financial statement. Duty is to verify the accounts of branches if you are visiting, that is 143 subsection 8. Duty is to inquire, that we have already done 143 subsection 1. Duty is to report on certain matters, 143 subsection 3, where the amendment has come in the J clause. Duty to report under CARO 2020, that is 143 subsection 11. Duty to report a fraud under section 143 subsection 12, 13, 14, 15. Duty to follow the standards on auditing while doing audit, that is section 143 subsection 9 and subsection 10. Duty to give the reasons. Duty to give the reasons on modified report. Whenever we issue the modified report, it is our mandatory duty that we have to give the reasons for modification in the opinion, that is 143 subsection 4. Duty to follow the instructions of C&AG, Comptroller and Auditor General of India and Central Government in case of government audit, that is 143 subsection 5, subsection 6 and subsection 7. With that, your section number 139 to section number 146 are completely over. Now we are moving towards, you can see that 145 subsection 145 signed to right to sign an audit report, and 146 I already told you, duty to attend the report, duty to attend the meeting. As I already told you, receiving the notice of a meeting, all the meetings except the board meeting, that is your right. attending the meeting, it is his duty to attend all the meetings, especially AGM, except what board meeting, and participate. You can only participate only when the audit work is being discussed. That we have already discussed in 146. Now we are moving towards the penal section. Small amendment in the penal section has come. Now what is the penal section? 147. Now what does the 147 say? 147 says a very simple thing. What does it say? Ki bhaiya, if you are a company and if you have done the violation of 139 to 146, the 147 says that ki being a company, if you have violated section number 139 to 146, the company will be liable to a fine of minimum 25,000, maximum 5 lakhs, and the officers in default who are involved in this particular default of 139 to 146 violation, they will be liable to a penalty of minimum 10,000, maximum 1 lakh. Now here there used to be one imprisonment up to 1 year or both. This point used to be there. This point has been eliminated. This is the amendment. So OID ka amendment came कि their imprisonment up to 1 year wala point has been deleted, omitted. Now they are only liable to a fine of minimum 10,000 rupees, maximum 1 lakh. Company is liable to a fine of minimum 25,000, maximum 5 lakhs. If the company is doing or officers in default are doing the default of section number 139 to 146. Now the same section 147 penalizes auditor also. If the auditor violates section number 139, 143, 144, 145, not all the sections, selective sections. If the auditor violates the section number 139, 143, 144 and 145, then auditor's penalty is little bit same like the company's penalty which we had just seen parallelly. Minimum fine of 25,000, maximum fine of 5 lakh rupees, and this fine amount will be compared with your 4 times the remuneration received, whichever is lower. So this is the penalty if the auditor violates section number 139, 143, 144, 145. The auditor ka penalty is same like the company, upper part. Minimum 25,000 of fine, maximum 5 lakhs of fine. It will be compared with 4 times the remuneration you have received as an auditor, whichever is lower. If the auditor knowingly cheats, knowingly means intentionally. If the auditor knowingly cheats or deceits whom? Company, shareholder, income tax department or creditor, then his penalty will be little bit increased. That is minimum 50,000, maximum 25 lakhs. It will be compared with your 8 times the remuneration received. So minimum 50,000, maximum 25 lakhs. It will be compared with your 8 times of remuneration received, whichever is lower. Whichever is lower. Did you get the point or not? Correct hai nahi hai? So here it is 4 times the remuneration received, and here it is 8 times the remuneration received. There the upper fine was 25,000 to 5 lakhs. Here the fine is 50,000 to 25 lakhs. Or here you are cheating, therefore you may be sent to imprisonment up to 1 year or both. So in the 147 section mein amendment came in the OID part. In the OID part, imprisonment up to 1 year wala point has been removed. So with that, our section number 139, 140, 141, 142, 143, 144, 145, 146, 147 is over. Only 148 is left and 143 subsection 11 is left. These two sections I will do and cover in the audit report. Mein 143 subsection 11 we are going to cover. In the next session of the next video mein I'm going to cover 148, and immediately after 148 I will take you to the books of accounts chapter. Maintenance of books, where we are going to cover 128 to section number 137. 138, I already told you, it is all about internal audit that we are going to cover in the chapter called Internal Audit, Management and Operational Audit. The 128 to 132 is made the most important section which you have to cover is 132, that is called NFRA rules. The NFRA rules we have to cover. Are you getting the point? So this will take another 2 lectures on this part, and 1 lecture after this, 1 lecture on dividend. So 148 plus books of accounts makes it to 3 lectures and 1 lecture on dividend. So in the coming 3 to 4 lectures of 1 hour each, we will be in a position to cover our 3 chapters: company audit, books of accounts and dividend. After that, we'll jump to the professional ethics, where the NOCLAR, the new amendment has come, that is non-compliance of laws and regulations. NOCLAR, NOC, non-compliance of laws and regulation. New compliance has come in the professional ethics, and code of ethics 2020 ka overview we are going to do. And after that, we'll move ahead with the certain other chapters, right? So that's it for today. So thank you so much, everyone, and I'll see you in the next lecture. Bye, everyone.